Welcome back for the last and one of the most acclaimed panels of the World Forum of Central Securities Depositories Conference. This panel will investigate the long-term view and major priorities of the world's leading post-trade infrastructures and market utilities. Their leaders will speak about the major trends that they deem to be the most important for their strategies. They will discuss the role to be played by a CSD in a continuously changing landscape. This is due, of course, to the new emerging technologies and how the CSDs position themselves for the future. They will also outline the major priorities for the industry work and the possible scenarios of the evolution of financial market ecosystems. I would like to invite to this floor this distinguished panel of market leaders. First, the moderator, Kay Swinburne, Vice Chair of Financial Services KPMG UK, former member of the European Parliament and formerly the rapporteur on the European CSD regulation. And then the speakers, Michael Botson, President and Chief Executive Officer of DTCC, Stefan Leitner, member of the Executive Board of Deutsche Börse, responsible for post-trading, data and index, Ulrich Binseil, Director General of the Market Infrastructures and Payments of the European Central Bank, Javier Perez-Tazo, Chief Executive Officer of SWIFT, and Guillaume Elliott, Chief Executive Officer of Euroclear ESES CSDs and Vice Chair of EXDA. Unfortunately, Lieve Mostrey could not make it, but we are very pleased that Guillaume is able to make it for this panel. It is a great honor for all of us to welcome each of you separately, Kay, Guillaume, Michael, Stefan, Ulrich, and Javier, and we welcome you for this session. Thank you.
Thank you very much, Anna, for that welcome, and welcome to all of you in the audience to this, the final session of the WFC 2022, where I really am honoured to chair a panel with this highly distinguished FMI group of experts, as introduced by Anna. And the conference has so far covered many of the opportunities, risks and challenges for post-trade. So what better way to round off this event than to have senior executives from the industry and indeed from the ECB here to discuss the strategic impact of both global and regional influences on the future of post-trade FMIs. Now, I'll be exploring over the next hour or so whether CSDs and FMIs more broadly will even exist in a new tech-driven world. Is there a continued need for the trusted intermediaries and counterparties? And how will CSDs contribute to the sustainability challenge? And how will innovation, new technologies, and the need to deliver market efficiencies influence the traditional marketplace? So we're going to explore what is really a demand, I hope, for real-time settlement. Is it really a demand, or is T+1 sufficient progress? Can DLT and existing settlement systems coexist? And are the conditions right for industry consolidation to yield finally benefits of scale? So we're going to discuss these topics, and I suspect a few more, but would also like to remind the audience that you too can raise questions for the panelists via the platform Q&A. And I will endeavour to get to these questions before the end of the session. But you're not here to listen to me, you're here to listen to the distinguished panel. So I'm going to begin by asking a general question as to what are the most important factors for FMIs in both the current and near future to ensure you satisfy customer needs. And I'm going to ask Guillaume to actually give us Euroclear's priorities to kick off the session. Guillaume, over to you.
Thank you very much, Kay, and thank you for the invitation. I would like to convey the apologies of Lieve Mostrey was absolutely unable to make it today, so I will do my best to replace her and to convey the messages of Euroclear. But thank you again for giving the opportunity to speak to this conference. Coming back to your question, Kay, I think what is fundamentally expected from us as a CSDs as critical market infrastructure is really to facilitate funding at scale and in a safe and resilient manner. efficiency, stability, safety, risk reduction. These are, I think, the commitments that we take as FMI towards our clients, but also towards the global community. Well, just to give you a little bit of an idea of the volume of transactions that flows through our system every week or every month, I'm not going to talk about numbers because, well, we are going to be lost with the zeros. But just to say that if you take the 7 CSDs of the European group, we process every week the equivalent of the GDP of the EU, and we process every month the equivalent of the GDP of the world. So this is the reason why we are so critical, and this is the reason why we have to commit ourselves to safety, efficiency, and stability. What makes also our role, I think, quite critical is also because we play a key role in the challenges that the world today is facing in terms of investment, of course, financing the climate transition, financing the businesses, financing healthcare, education, pensions. Of course, we are also at our place in the market, also instrumental to this objective. So efficiency, stability, safety. This is really the core needs of our clients and what they can expect from us. This is the reason why we are investing so much in IT modernization, in resilience, cyber resilience. This is also the reason, but probably we will talk later about that. We also, of course, explore new technology, not to bring new technology per se, but to see what this new technology can bring to this commitments that we make to our clients. So basically, as a CSD, yes, efficiency, stability, and risk reduction. This is still the priorities that we see.
Thank you. And Stefan, maybe you can give us Deutsche Börse's thinking with regards to their customers.
First of all, let me also reiterate, Kay, how much we appreciate being part of the conference in so many areas, and also for this panel. And Guillaume has summarized it and framed it very well. He has framed it in a way of saying, basically, our clients expect first and foremost that we really efficiently, safely, and reliable in a way function. That being behind the scenes, that smoothlessness, I think is a big thing. If I make it a bit more specific around that, then I think there's really 4 elements I would want to highlight. Our clients are still under enormous and renewed cost pressure and regulatory. They have a big agenda. So we need to deliver a scaling benefit that is really tangible. Flat cost at ever bigger volumes, that's their sense of what they're looking for us. I think in a similar way, the political and the refragmentation of the world that we are seeing, it raises a lot of expectations on the FMIs of being the interface and the trusted parties that makes in turbulent environments reliable linkages really happen. That's our job. I mean, we have built long-standing relationships among ourselves, and those need to work also in turbulent times. We've seen it over the last few months. It's very, very important that network really holds, and that's what our clients want from us. I think I would emphasize what Guillaume has said, which is the point around the depth of capital markets to fund these enormous challenges, sustainability, the change around state responsibilities, a new energy sector that is emerging, all of that. We need to deliver reliable local and global markets that can really master these enormous funding volumes. That's what we need to deliver. And let me highlight the last point, which a year ago would have totally dominated this agenda. It's the continuous change of asset classes. We need to support the new ones. The passive investment, the growth of the ETFs, the alternative assets, the private asset classes, we need to support them. The entire ESG-based investments, we need to facilitate ESG in every step of the processing chain. What it means is really collateral that is based and considers ESG data and so on. And lastly, I mean, clearly the crypto, the new asset classes. So again, we need to tackle and have a response that is ideally aligned across the industry and gives a sense of how standards can help. Again, in also the new asset classes to really drive efficiency and safety. So that's a bit more tangibly how I would see those four aspects fill out the framework that Guillaume has put out there.
Thank you, Stefan. And I think we'll come back to a few of those topics you've just raised in detail and some more questions later. But Mike, I guess we've heard from two European entities. How does the DTCC spot and address these market needs? And indeed, your recent announcements about moving the settlement cycle to a shorter T+1, is that part of this addressing market need? I think you might be on mute, Mike.
Sorry about that. I am on mute. Thank you for having me. I appreciate that. I just want to build on Stefan and Guillaume's points in that reliability, that safety we bring to the marketplace creates the depth of the capital markets, but also puts us in a position of trust and puts us in a position where we can be advocates for the industry, not focusing on a certain client, but really the entirety of the financial marketplace. And that's really what the focus of what we do in innovation generally and responding to clients. So as been pointed out by Guillaume and Stefan, people want efficiency, they want reliability, all those things. So when we started looking at T+1, we actually started looking at it when we went from T3 to T2. And there was discussions at that point, could we get to T1? And the view was that was a little bunch of a bridge too far, but shortly after the conversation started, we started working with SIFMA and ICI here in the U.S. in terms of the street side and the institutional side to gather, support, make sure we understood what the issues were, and then lay out a plan where we get there in an appropriate manner and in an appropriate time. I think it's just an example of, again, being that neutral party that can bring issues to the forefront. And it really comes down to listening to your client, asking them questions, and hearing what they have to say and what is feasible. We'll talk a little bit later about T1, T0, RTGS, but some things are achievable. Some things sound great on paper, but in reality can't be done. And I think the CSDs and the FMIs of the world have a responsibility of separating the fancy from the possible, and that's what we do a lot. And I think it cuts across. For us, it cuts across not just the normal topics, but DLT governance, we've written white papers on, data governance, systemic risk, cybersecurity, interconnectedness risk. But I think about Cybos and all the work that Swift does, bringing all of these issues to the forefront, because there is no one issue in the marketplace. There's a myriad number, and the real question is, how do you prioritize for possible steps forward? Again, I'm sure we're going to talk about the technology, but how do we look at CBDCs? How do we look at central bank digital currency, and what impact will that have on the marketplace? Will we be settling against stable coins sometime in the future? Will we be settling against Bitcoin, God forbid, in the future? But I think these are all things that we have to, as CSDs and as MIs, take a step forward and be leaders in the industry for, given the roles that we play. So it's an exciting time, but it's going to be a very confusing and difficult time at the same pace over the next 5 or 10 years.
Thank you, Mike. And Javier, how does Swift view the acceleration of a settlement cycle, and what other priorities are your customers telling you should have?
Well, listen, so thanks, Kate, as well, and thank you for inviting me. So in terms of maybe some, without repeating all of the points that have been mentioned by my colleagues here on the panel, all spot on. Well, more generally, maybe I'll refer to some that have been mentioned. Clearly, as financial market infrastructures, it is our obligation to continue to respond to market and client needs and facilitate an environment of innovation and efficiency. But very importantly, mentioned by actually all, Guillaume, the first one, maintain the highest levels of security, resilience, availability of systems. That is why we are trusted, and that's why we have a critical role to play. Well, in our case, we also have roughly, we don't get into details, but roughly we carry the GDP of the world in about a week. So that shows the criticality as well of an organization such as Swift. And at the market level, it's been mentioned as well, the digital transformation of financial services continues to accelerate. even more since the pandemic, and the industry continues to innovate in securities processing, experimentations around tokenized assets. Mike just mentioned it, the adoption of new technologies, and of course the growing importance of ESG, particularly the acceleration of the environmental and social parts. Also worth mentioning the continued consolidations in the securities market, particularly in the custody and securities servicing space. And at the same time, you have fewer new entrants in the market. That goes also hand in hand with a growing discussion on fragmentation, refragmentation, to quote Stefan, and how market infrastructures could interlink or interoperate with new tokenized ecosystems that are tokenizing equities or bonds, and that is a trend that we're also seeing in the payment space when considering CBDCs and the interlinking between CBDCs and fiat currencies, between account-based networks and token-based networks. So, in summary, I mean, what I would say is that what it means for clients, maybe I can summarize it in three main priorities. Always the foundation. At the foundation level, maybe is that the fact that their focus continues to be on reducing friction and manual processes through data inconsistencies and addressing the high and rising costs of settlement failure. That has always been there, but remains the fundamental priority for our customers. Maybe the second level is that point about interoperability between platforms and across asset classes that has become even more prevalent over the past few years. And maybe at an advanced level, and we can talk about it later, our customers are seeking to enhance their customer experiences by enabling new data-rich capabilities into the security servicing channels, and also providing that to their front-end applications to their own customers. So that would be some of the trends that I would highlight.
Excellent. And Ulrich, from an ECB perspective, I mean, if we talk about a move to T+1, what does that mean for the participants of T2S in CSDs? And indeed, what are the other needs that you've deemed to be important in this new world that we're in?
Yeah, thank you, Kay, also for having me as a central bank in this panel. As Mike explained, the US took the lead now on this move to T+1, and also started, of course, with extensive industry discussions. And it's a long-term trend, of course, to move to shorter settlement cycles. So understandably, also in Europe, we will discuss it. We will have to discuss it. We will have to see what is specific to the US, what is specific to Europe in terms of the benefits and costs. Obviously, it has a merit in itself to remain aligned globally with the standard settlement delay. So that will be one factor, a plus factor, let's say, also on our side, if the US moves. And in general, one could say, of course, a shorter settlement cycle is everything else equal better than a longer one for various obvious reasons. The next step in Europe is to then discuss it with the industry to see benefits and costs on the industry side, also taking into account, of course, the reality of our infrastructures of security settlement of T2S and the specific daily cycle in T2S. So what would be really the implications on clearing, on securities financing, on settlement efficiency if we do this move? And, just from having a quick look at the time windows, we would believe that if we would move from T+2 to T+1, the window available for securities financing would move from around 24 hours now to 2 hours. So that's something then to really think about. What would it mean? Can we adjust to this? We need to carefully assess with all stakeholders from a strict T2S perspective. From a quick look at the issue so far, we believe there would not be a showstopper, but but that doesn't mean that it's for the industry as a whole obvious. And if the industry as a whole comes to the conclusion that there are merits to go for T+1, but let's say T2S would need to adjust its cycles in any way, then of course we have to look at it. We haven't looked at it. So next step is to approach the industry in our fora, like AMISECO, and to have their first discussion of the topic. So we are not very advanced. Thank you.
And Ulrich, are there any other needs in the system that you would deem to be a priority right now?
Well, I would say the general ones that have been mentioned by my colleagues, I can fully subscribe to, and T2S being, part of the securities, the post-trade, the principles of reliability, safety, low costs. I mean, no question that T2S is a major contributor to that, and we try to deliver on this. We try to evolve. With consolidation, we try to contribute more efficiency also on the liquidity side. We try to remain cost efficient and so on. So I would say we are fully aligned with the rest of the industry here.
Thank you. And Guillaume, I'm just going to come back to you with regards to this settlement cycle. I mean, when we wrote CSDR and the politicians got into a room to decide what the deemed sort of time was back in 2014, it was decided that T+2 was the minimum, that you should go for, you could go even further and get down to close to T+0. Is there an optimum settlement cycle for Europe?
Well, that's a difficult one. Of course, well, I think I can echo what Ulrich has just said. We see clearly that the discussions around the move from T+2 to T+1 is getting tractions in the UK, but also in Europe, following the agreement that has been reached in the US. At the same time, we have not seen, or we do not see coming up, any legal requirements to move to T+1. And as you mentioned, it will require probably a modification of CSDR. And in the proposal of CSDR review, which is currently on the table of the Commission, there is no such a requirement. So we're not there yet, as mentioned by Ulrich. For us, this move to T+1 is certainly not a matter of technology. We know that we can already shorten the settlement cycle. It's already possible for Eurobonds, for instance. It's more a matter of market demand, I would say, and I believe that we still need to evidence this market demand to see if we move forward. And as Ulrich said as well, I think there's a matter of consideration that we have to keep in mind is also risk management around this move to T+1. We are just implementing the settlement discipline regime in Europe. In the past 2 or 3 months, we have been putting in place this regime, and I was wondering myself what would be the impact of a T+1 or T+0 on the settlement fails, and which to avoid settlement fails is close to the heart of the Commission as well. So I think in the debate we should also probably include this angle into the debate. But coming back to your question, which is the optimum would be probably what is coming from the market demand and from the discussion that will now be engaged with the AMISECO, at least in Europe.
Thank you. And Mike, just to conclude this part here, and I suspect it links with our next set of questions, which will be on technology. Is T+1 the right time, or should we be getting close to near T0 in the way that some of those new actors are saying T0 is doable?
Yeah, they say it's doable until they try to do it. We like throwing out numbers, but I think when we were doing the meme stock event of last year, when the volumes exploded, a normal day 3 years ago, pre-COVID, we would do about 120 million buys and sells a day in the marketplace. During the meme stock frenzy, we were up to almost 470 million transactions a day. So the scaling of what has to be done is far beyond what most people understand and don't really comprehend. It's hard to say. I think, as it's been pointed out, it's not really a technology issue per se. I mean, the technology can be adapted and be tested, et cetera, et cetera. I think Ulrich and Guillaume both pointed that out. It really is the market practices that have to be evolved. The straight settlement of the street side transactions, broker to broker, bank to bank, are simple. It's really the institutional side where the complexity comes in, the retail side where the complexity comes in. And when you look at the range of firms, you have everything from a BlackRock and Fidelity, who are highly sophisticated, down to some small, 3-person shops who are confirming and allocating trades via email. And the inefficiencies that are in the system. So the whole shift from T2 to T1 really is an efficiency play. And how do you automate the entirety of the chain? Because as we all know, it can be the smallest player that's going to cause the problem. So our ITP, institutional trade processing team, works with the buy side. We have systems that'll bring confirmation affirmation rates up to 98% on day one. All these things can happen, but you need everybody to move in lockstep. There is talk of T0, there is talk of T1, but when you think about the demands that'll put on stock loan, stock borrow, pledging of securities, FX transactions, just the pure processing, you need to have almost a perfect process from the minute the trade is consummated to get it done within a day. Is it possible? Sure, but if right now there's a 48-hour window to settle, if you go to night of T0 netted, that would be 8 hours. So I think people kind of think of it as, I'm just getting rid of a day. No, you're going from 48 hours to 8 hours. That's a very massive reduction. I think Ulrich said for financing, 24 hours down to 2 hours. And I think those are the nuances that have to be understood by regulators, stakeholders, and whatnot. That's why you need that industry dialogue. I do want to talk about RTGS because, again, coming out of the meme stock there in the U.S., there was this discussion of if everything was just using DLT and we would real-time gross settlement, all the problems of the world would disappear and there'd be limitless trading activity. That would require somewhere around $1 trillion of financing to be pre-positioned every single day in order to settle, because we do somewhere between $2 to $4 trillion of buys and sells a day. So you have to have not only the security available, but you have to have that cash available. So when you think about what we're trying to do is take a normal margin number of somewhere around 10 to $15 billion in the U.S. equity market and bring that down to sub 10 billion. And that's viewed as a very aggressive goal. But somehow doing $1 trillion pre-positioning cash and securities or more, depending on what's going on that day, is viewed as feasible. It just shows the naivete of what some people are thinking about the market. It's not about DLT. It's not about using a new technology. It really is about what is the movement of the cash and securities, what are the market practices, and how do you solve with that? Every market has to figure it out themselves. I think once we get to T1, we'll be asked to look at T half, maybe the morning of T1 or end of day netted T0. But they'll bring a lot of complexities, and we're going to have to work with the industry again to figure out, does it make sense? You're replacing credit risk and market risk with operational risk. And that's the balancing you have to figure out.
Thanks, Mike. And I think you've just mentioned DLT, as have most people in their introductory remarks. So maybe, Ulrich, you might be able to give us a bit of a helping hand, looking at the impact that these new technologies might have upon the system and on the roles of actors and their ecosystems more broadly, if you can set the scene for us.
Yes, thanks. And of course, we try it. We have to understand it ourselves. It's a very, I would say, diverse set of initiatives which rely on DLT and pretend to do things that conventional technology cannot do. And of course, for all of those initiatives, we have to understand what is the contribution of DLT that could not also be achieved with conventional technologies. There is a lot, of course, to progress anyway in terms of automation and straight-through processing through the entire lifetime of the security. And work on this is always ongoing and is progressing, and more should be in the pipeline. There's a lot to do. So what is really, idiosyncratic to DLT, and what is only, linked maybe as a selling point to DLT? That's a good question. And one example that comes to my mind, it's a bit from a different world, but in retail payment, when we talk on CBDC, there are people who say, okay, this needs to be on DLT because then you can do programmable payments. But then if you look at the conventional technology, you have the PSD2 in principle allows for payment initiation of third parties via APIs. You could have automated conditional machine-to-machine payment. I mean, everything is possible with conventional technology, but actual deployment is very low, not because you cannot do it from a technological perspective, but because there may be legal impediments or a lack of a business case. So I think that has an analogy also in wholesale payments and securities settlement. On the other side, of course, being challenged by new technologies should also be seen positively. For the incumbents, the incumbents need to strive to improve their services, to lower costs, to remain efficient. They have to accept this competition. So at the end, I think one cannot escape the need to carefully analyze where is really, a specific contribution that new technology brings. And this is a matter of detail. And also one has to look at the drawbacks, reintroduction of fragmentation. I mean, that's the whole, of course, question. When you move to new technology, maybe unavoidably you reintroduce fragmentation, but then at least let's only do it for convincing reasons, and then maybe in an optimized way and in a temporary way. And even if we do that, of course, the harmonization of market practices and market standards is not off the table. Also, or if you want, it becomes even more important to keep in mind the objective of harmonized integrated markets if you come, if the industry comes with new initiatives. Let me say something on the specific central bank perspective also. So obviously, the DLT, the word D for distributed, and DeFi has also this D. It's not the same as a C in central banking. We are central, the most, our definition is to be a central issuer. And so the question is, how do those two words go together? And, some people say you need to put central bank money on the blockchain, and that has huge potential also in security settlement. And maybe, we have to think further about it. But also, again, in analogy to this PSD2 retail payment example, there could also be, an approach where the two worlds are linked via an API, where now in the world of central bank money, we have instant 24/7 payments, at least as far as the retail is concerned, but the technology can be used in principle for wholesale. So you could also link those worlds in this way. And it's, the number of questions arising on our side are far less. And again, it's a non-explored potential that we should maybe think first, or simultaneously at least, with, any more far-reaching solutions to put central bank money on the blockchain itself. And now, okay, we see the interest of the industry and all that. So what we have been just launching is a survey with industry stakeholders to really understand where they believe the key points are that DLT can bring. We should have then the discussion at some stage in AMISECO and take it from there, including then in terms of inspiring us what to do on the central bank money side. Thank you.
Thank you, Ulrich. And Guillaume, Euroclear recently bought a stake at Finality. It also has a stake in the fintech Liquid Share. I mean, do you see that the technology is now getting progressively mature enough to be explored and operational in a CSD? And I'm going to put you a bit on the spot as to what your prediction will be for the broad adoption of DLT technology by a CSD going forwards.
Always difficult questions coming from you, Kay. Well, first, of course, well, it might be obvious, but of course, technology is key for us, and we can say in a certain way that we are a tech company as a CSD, and that's the reason, of course, that why we are looking so carefully to all the innovation that are popping up, and especially on the DLT. You have mentioned this this commitment that we have taken with Finality, with Liquid Share. I think it really brings the message that it is a kind of collective journey that we have to have on this topic, and this is the reason why we are partnering with all the big organizations, and we have to be modest enough to say that we have to learn still from this technology. What can it bring? What is doable? What creates value? What would not create value? And for sure, for us, the technology is not an objective per se. It should be a mean to an end. And the end is, well, coming back to my previous point on bringing more efficiency, more stability to the system, maybe bringing also bringing the system to be more cost effective, probably as well. Technology is not also only about DLT. We can also bring some new features using or data, using artificial intelligence, bringing new service through artificial intelligence. So there's really a range of initiatives that are popping up. From the experiences that you have mentioned on Liquid Share, which is a DLT for SME financing, Finality, which is more consortium about cash tokenization for the purpose of settling transactions on DLT platforms. I think what we have learned first is that we believe that DLT will not make CSD irrelevant. It was also coming back to one of your point in the introduction. We do need that this DLT system will still require some kind of trusted third party to organize, monitor these systems, and CSDs, but probably others as well. But CSDs can be well placed to play that role as today being trusted infrastructure for the participants. The second lessons learned is that there's still a question on the table. Is the question about how the market will transition to the new system. Of course, it will not happen overnight, and there will be probably a kind of coexistence of the new systems and the legacy system, and this can also bring some more fragmentation, maybe temporary fragmentation, but still fragmentation, and we have to see also how we're gonna manage with that. And it is a link with probably the third lessons learned, which is what is key probably, and it has been mentioned by Javier. Interoperability will be key also in this journey. Not only interoperability between a legacy system and blockchain DLT systems, but also interoperability between the DLT systems themselves. And this also is key for us, and we do believe that with the open architecture, which is the one of Euroclear, we are also well placed maybe to facilitate a little bit this interoperability going forward. So, well, we see that things are maturing and frankly maturing quite fast. And probably the main reason why it is maturing quite fast is because it is really conceived as a collective journey with many people around the table sharing experience and sharing experiments. We have done such an experiment with the Banque de France and the French Treasury. We have tokenized a French govies, and we have replayed all the settlement cycle from the issuance to the secondary market. And the settlement against digital currency of one big, of course, bond issuance. And we have learned a lot with many stakeholders around the table. So it's maturing fast, and what is great to see is that it is really considered as a collective journey of the market.
Thank you. And Stefan, do you think that CSDs and FMIs are well prepared to cope with this new technology? And indeed, maybe you can pick up on some of the comments you made earlier with regards to the CSD's role in new asset classes, including crypto. I think our audience would be very interested in your views on those.
Thank you very much, Kay. I do believe, obviously, this is an accelerating journey as Guillaume was describing it. So I think the biggest challenge for us as CSDs is to be moving in the pace that is the right pace, and I'll come back to that. But on the other side, I think, are we well placed as CSDs? Absolutely. I mean, this is something we need to keep reminding our clients and regulators very much. I mean, we are the ones that are used to operate high volumes, highly regulated, big processing environments in the security space. This is not something that drops on you, and Mike earlier alluded to some of the basics that people ideally sort of sometimes in an idealistic view overlook. I think it's very, very important to keep that basic tenet combined with the trust, and the trust is something that is also unique. I mean, this is an environment in which enormous volumes are processed, where the trust at the end of the day into the CSDs is something that is at the heart of why we are in existence. We guarantee that things exist. We guarantee that counterparts are really matched, and at the end, securities transactions are really settling. And I think that places us very well, because to your point, what is our role in the new environment and even in the distributed network environment is delivering that trust, the trust in the quality of the networks and the trust in the assets and tokenized or whatever form. That those two components, I think, are the critical contribution, which the CSDs will continue to be very privileged to deliver. And that's what we therefore need to base on our momentum in moving fast enough. For us, a key milestone clearly is what we call D7, which is the application of a fully digitized front to back, a digital native securities framework that we have started to put in place on the back of the German regulation from a year ago that will expand into the European space more widely. I think it will really deliver at the heart of it a same-day issuance type environment. It will deliver a fully paperless and therefore self-executing also a smart contract-based environment. But again, the important point that Guillaume made and Ulrich in a similar ways, we need to focus on those areas where it really brings a benefit. That's why one of the areas where we see that benefit is in complicated, in Europe, very widely used structured retail products, for example. That's why these environments have a benefit, an immediate benefit. You want same-day issuance. You want complex where we can add value with new technology.
Thank you. And with regards to crypto, do you see that there's some things in particular we need to take care of, or is that just another asset class?
There are many ways to look at crypto. I think one certain way that is ahead of us is that it needs to move into a regulatory frame that gives it a different sense of reliability. And the recent events have reminded, that the numbers that we talk about are staggering. And the numbers are staggering in terms of loss of wealth, if not handled well, if there is the wrong portrayal and if there is insecurity. So I do believe it will be very, very important to define clearly what can it be used for and what's the purpose. I mean, there are many asset classes that have value that is hard to track. Those asset classes, however, are used for other things. They're not at the backbone of our modern society. And I think in the backbone of our modern society, we need something that is properly regulated and has the right frame when it is really used in something as existential as funding of business activities.
Thank you. And Mike, I guess it would be good to explore the evolution of the FMI business models as we transition to this new technology. And in particular, I think the term DeFi, I've heard it pronounced in all different ways, but if you can actually give us a bit of a feeling for where you think all of this is going.
I'll start by being snarky and say I don't believe in DeFi. I think much of what is said is DeFi is simply taking markets away from existing structures and into a new centralized structure that somebody else controls. Sometimes it's a pure technology play. Sometimes it'll be another company. But I always see DeFi as simply somebody's attempt to steal market share away from existing marketplaces. So I am not a believer that in the long term that sort of marketplace can last. When you think about what we've talked about this morning and this afternoon, about trust, reliability, the viability of the ledger, people's ability to know that something is owned. I mean, I think about Euroclear going into Russia 10, 15 years ago, and all of a sudden the trading volumes boomed because there was trust in the system because of Euroclear being there. All of a sudden, all that's going to disappear and it's going to go into DLT, and everybody's going to likely not worry about who's in the system. It's going to be permissionless. It's going to be open. It's not going to be regulated. It's not going to be overseen, et cetera, et cetera. It doesn't make sense to me that a pure DeFi, as people describe it, sounds like the wild, wild west with very little controls, very, very little oversight. What's made the markets function around the world is the exact opposite. It's trust, as we said, it's reliability, it's accountability, governance, et cetera, et cetera. So, I really don't believe that there will be a DeFi world. It'll be fragmented in the way that's being defined. Now, could there be different players out there where markets do move and volumes do move? We have 44 different trading platforms that connect to DTCC in the United States. So could there be 144? Sure, but you still need somebody that's going to pull it all together. And I think that's the role the FMIs will play. We'll provide governance, we'll provide accountability, we'll resolve issues, we'll move the market ahead, we'll make sure there is standardization, all the things we've done for years, but using a new technology. We do need to separate the technology issue from this DeFi marketplace issue. I mean, the technology will revolutionize. It will, if we as CSDs and FMIs, if we don't start adapting to the new world, we'll be disintermediated. So I keep on telling my management team, we have to disintermediate ourselves before somebody else does it, because it will happen if we stand still and just say, no, I'll turn a blind eye. So for me, just two things to point out. One is when FinTech first started, I mean, I remember being at Davos and, we had a meeting in the financial governors group, and it literally was the legacy firms and it was the FinTech firms. And it was like, the two rival gangs never to talk to each other. It's like West Side Story in the financial marketplace. Roll the clock forward 5 years later, and all of a sudden you see Dan Schulman and Brian Moynihan sitting side by side at Davos talking about how PayPal was now connected to Bank of America for payment rails, right? And I think that's exactly what's going to happen in the securities marketplaces. We will adapt to the new technology. Obviously, it can provide a lot of benefits. How we get there, there's a lot of different models. I mean, ASX obviously is going for a big bang version. I think SIX is doing a parallel version. We're putting in DLT where we think it can provide benefits, but we're not rewriting everything. But it will be used. And that's just DLT, AI, ML, all the new technologies will change how we do our jobs. But the fundamental role we play, I don't think will change. I do also want to bring up, I think it was Guillaume brought up this whole transition from legacy to the future. I mean, I think if you ask almost every global bank what their back office system is running on, it'll be COBOL if they're advanced. Some will be on Fortran, some will be on natively developed languages that nobody even understands anymore. And somehow everybody thinks that we're going to leap forward into this brave new world and leave all that legacy behind, rebuild it at a very low cost, and just move along our merry way. Again, I think that transition will take 5, 10, 15 years from the technology basis, the investments that are made already, and just maintaining that technology. Now you're adding the complexity, advancing to a whole new way of doing things. So, DeFi will force us to rethink technology, will force us to rethink market practices, will identify efficiencies. But I just don't believe that all of a sudden markets, as they exist right now, will disappear. FMIs will disappear. Market governance, market regulation will disappear. I think that's a very Pollyannish view of the world.
Thank you. And it does seem that, regulation of DLT and some of these other new technologies is going to be important. I would always make a plea that it should be harmonized as much as possible globally. And I think, actually making sure that there are common grounds for regulating across all jurisdictions makes perfect sense in what would be a new DeFi world, if it ever exists, as you say, Mike. But I've got an audience question before we move away totally from DLT, and I'm going to volunteer Ulrich as a first starter. If anybody else wants to chip in a reply, then please do. But the question is effectively asking whether you see a risk of jurisdictional competition through the early regulatory adoption of DLT? And is there therefore a possibility of a first mover advantage for some? And I think the questioner has drawn the parallel to the product concentration at single CCPs in different jurisdictions. Any thoughts, Ulrich?
Yeah, very briefly, it's nothing that had been so much at the top of my mind. Of course, the blockchain industry, I mean, would argue so, no, that you know, we have to move faster in Europe. We have MiCA, we have the DLT pilot regime in the making, and it's a bit slow motion. You know, the initial timeline has not been respected at all. So some people are getting nervous, but I would not see it from this perspective that we need to be nervous from a kind of jurisdictional competition perspective and must feel bad in Europe because we're not moving faster. We should get this right. And there's a lot of uncertainty, not only on our side, but also in the US on how to best approach those things. So let's get it right. And I don't feel we need to rush from the perspective of being the first ones. Yeah.
Any thoughts, Stefan?
I would think that the inner European dynamics in the last few years has shown that in building early centers of expertise, clearly there is a bit of that competitive dynamics. I think Europe has done a not so bad job. You know, yes, there's more advanced in some Asian environments, but the heart of critical mass has been created, and we've seen this also moving across different jurisdictions in Europe. So I think in that sense, there is an importance of the competitive dynamics. We should be honest and realistic about that, because it will attract and build expertise through, you know, those possibilities that are real tests rather than just paper and academia. So I wouldn't totally dismiss the point. And I think as we speak as a truly global panel here, with the exception of Asia, I do believe that we as the older continents have to stay on our feet in a way.
So thank you for that. And I'm going to move slightly away from this. And Javier, maybe you can bridge the gap for me in terms of how do you leverage transactional data processed by your institution? And do you think the use of data is going to help the industry to become more efficient and resilient in the future?
Well, thank you. Okay, and well, clearly the short answer is yes, but maybe, as you said, to bridge maybe on the very thoughtful and lots of insightful comments from my colleagues on technology and its role to answer business needs. Maybe I'll bridge it and talk about data right after, because the two are indeed interlinked. I do think, when going back to some of the comments made, Ulrich started, of course, well, we didn't say that, I do say that, but you know, that DLT or any new technology should not be should not be a solution in search of a problem. It should definitely be looking at answering a business need, that you said. And I think it's a fundamental point, because indeed, there are many technologies, and by the way, not only DLT, again, quoting you, Ulrich, I do agree, it's a good example, what's happening in Europe with PSD2, but more generally with open banking as a whole, the use of APIs to provide front-end innovation to end customers, consumers, or even corporates, and leverage this technology, this API technology to new levels, and at the end of the day, create a myriad of fintechs that are providing great services to consumers and to the industry, and growing their value in the marketplace. So it's not only about DLT, but it is important to realize that all of these technologies need to, at least from our own perspective, and that's where we place this panel, the market infrastructures. We are essentially the back end of the industry. Of course, there needs to be a whole host of innovations in the front end, in the customer channels, leveraging DLT, APIs, and many other technologies. But we, as the back end of the industry, are critical, systemically important infrastructures. We need to respect the regulated market requirements and meet all the expectations in terms of compliance with cyber sanctions, AML, KYC, and so forth, liquidity. So in a sense, and that's a term I like to use, it's to be responsible innovators. So we need to innovate, but with this responsibility of keeping everything that we've built, all the value that we've built in terms of controls and in the regulatory space over the past decades. So with that, and again, linking on, continuing on the technology front, it's been mentioned by several, I think everybody, that at the end, yes, there's going to be innovations at jurisdictional level, but we need to make sure that true, the world is fragmenting, and that is a fact at the moment. But we need to make sure that we continue to maintain this level of interconnectedness at the infrastructure level, so that we continue to provide the services or global trade as it's always been happening, and that interconnectedness and that interoperability of different technologies at the jurisdictional level. Yeah, to the question made, yeah, there may be some countries adopting CBDCs, to name one innovation, faster than others, but at the end, it is fundamental that you have this interlinking at the infrastructure level of, say, account-based networks to token-based networks, which is an area that SWIFT is investing a lot. We just recently announced that proof of concept created around that interoperability between fiat and CBDCs. And many of you, I mean, Guillaume mentioned that as well. So it is something that it is our role as financial infrastructure, as critical core MIs, to provide that interoperability of the new world, so that we achieve this business need of continue to increase speed, efficiency, and stability of the systems at the back end, to provide front end innovation by all these innovations being carried out by fintechs and others. So that is at the end of the day our role. Then to your question, how this links to data, that is another fundamental. Yeah, technology at the back end and all this stability is one key ask that we have and that we need to comply with. But data is a fundamental one. It's a fundamental one because it is a catalyst for not only added innovation and providing potentially even further reduction of operational costs in resolving exceptions, allow for faster settlement processing, including partial settlements, improve customer experience, and at the end of the day, improve market efficiency by allowing for more trading through smarter inventory management. It's not only about that, but it's also about having even richer data, and that's why the industry slowly but surely moving into ISO 22222, and by the way, the Euro system and the ECB, led by Ulrich, is at the forefront of that adoption in Europe, and we will be supporting that with the cross-border piece as well. But that data-rich standards is going to be the another fundamental for additional services. Somebody mentioned AI and machine learning, data mining to provide some visibility about anomaly detection or other kind of insights from aggregated data. Obviously, always keeping, and it was mentioned as well, trust, security, privacy of that data. And maybe to one last point to make is you ask about SWIFT, about besides the adoption of ISO 22222 and the rolling out in our backend, to interconnect the world with this new standard. it's fundamental, we believe, to have a consistent view and better access to the post-trade data that is shared among participants, and that is key for making shorter settlement cycles work at the highest level. So it's an area where we have actively been working on through a pilot that provides traceability, a securities tracking initiative. So it's a pilot that we'll be launching early next year, and it's a pilot that is allowing all of our customers that are part of it to see how this could work in practice to reduce settlement fails and so forth. So that's essentially what I would say on data and technology.
Thank you, Javier. And Mike, you and I first met many, many years ago, and you told me all about how having the data gave confidence back to the system post Lehman Brothers. And so data obviously plays a really important part in your role in the US as a market infrastructure. How do you see you being able to leverage it even further going forwards?
Well, look, it's the old adage that, it's not the data, it's the information you get off the data that is critical. And I think as Javier said, I mean, providing transparency into the marketplace, be it pre-trade, during trade, post-trade, provides the oversight to make sure that the markets are stable and well functioning. So I think it can be leveraged in all different ways in terms of, post-trade, in terms of the efficiencies, in terms of identifying stresses in the system, identifying, potential improvements that can be made. I think one of the things we've learned, and this is not in my CSD role, but it's in the Global Trade Repository role, which is another business we have, which I know you're very familiar with. When the Pittsburgh Summit was finished, and they said they want to have global regulators want to have global trade repositories so that stresses in the system that we saw in 2008 could be identified on an international basis, cross-border, as well as within each regulator's home marketplace. And everybody walked away and said, great concept. We started building what we thought was going to be a single repository of information that all regulators around the world could share, or at least look at it in a similar manner. I think what happened next, though, is each national regulator or regional regulator decided to do something slightly different. And again, it's not for malice or bad forethought. They were focused on what they thought was important to regulate their home market and not the global marketplace. So what resulted was a European version, a US version. Canada kind of followed the US, Australia and Singapore did things similarly, Japan did things differently. So the whole concept of a global repository of common data elements just disappeared. And now, 12 years later, we're going back and trying to retrofit as much as possible. A lot of the reporting standards have changed. So I bring this up as an example of where data can be so powerful and could identify stresses. Archegos has a case in point that's only a year old. But the focus inevitably ends up being on their home market. And this whole global approach can sometimes be lost. Now, saying all that, I think I just want to echo what Javier said. The good news is through the work of ISO, through the work of the industry, you have LEIs, you have ISO standards, you have security identifiers, you do have interoperability, you do have messaging standards, et cetera. So the industry can get together, and there's a lot of victories, that have occurred through the last few years, but it really takes a concerted effort to get it there. Otherwise, you inevitably fall back on your home market.
And Stefan, maybe you can give us a European perspective on how useful that data might be.
Well, first and foremost, I think Javier alluded to it also. We need to make sure that we deliver data on the most immediate challenges. The settlement discipline regime, for example, Guillaume alluded to it earlier. It has immediate economic impact on our clients. So we need to support them in ensuring settlement efficiency and reducing fails, for example, by data. That's what we have started to do. And we see an enormous response, enormous interest from clients because it really addresses something that's very tangible. I think the second point, which often gets a bit lost, I think, is the point around the static data. The fact that we still have not golden sources in the proper way that are used in the market. And I do believe that we globally have a big and an important role to play around this. And as we talk about changing technology, about the entire field of tokenization, I do believe that the open source quality is something that needs to become, the central tenet of what this is all about. We deliver the trust that the securities exist, but at the same time, what they really do in different circumstances. I mean, too often still we have, in the asset servicing side, situations where transmission issues occur for the reason that there is different fields are used and different communication tools. That is not good enough. I think we have on those two dimensions, the immediate sort of challenges, and STI is a good example. And secondly, I do believe the golden source, that's where we at the end have to deliver something that is really usable and doesn't then suffer from translation again.
Thank you. And we've got just under 10 minutes to go. So what I'm going to do is maybe give each of you an opportunity to talk about the evolutionary trends in the industry and maybe give your feelings on where you think the priorities are going to be in that short, medium and longer term. So maybe starting with you, Mike.
Sure. I think, as I said before, the fascinating part of or the challenging part of our future will be living in the past, the present, and the future all at the same time. And I'll just sum it up that here in the U.S., we're behind Europe in a lot of ways, and we still have paper securities. So we will have, I think in the next 5 years, 4 different forms of securities. We'll have paper securities, we'll have dematerialized, we'll have tokenized, dematerialized, and then we'll have natively issued securities. So 4 forms of securities. And on the other side, we will have central bank money, we may have CBDC, we may have stable coins, and we may have cryptocurrency. So 4 by 4, and how we deal with that, and moving away from a legacy cash versus security to this new world of asset for asset processing is going to be the real challenge. And that's going to force us to adapt new technologies, but at the same time, run old technologies. And that's going to be very expensive and very risky, but I don't see us getting out of that world for the next 5 or 10 years.
Thank you, Mike. Ulrich, maybe your thoughts.
Yeah, no, there's a further, potential for harmonization, integration, and that has a global dimension and a European dimension. And on the global one, I don't need to repeat what Kay has been saying. So definitely ISO 20022 deployment in the security space in a full manner, and of course, Javi, we have been in touch on that also extensively. That will be essential. Moving the industry over, doing the investments sooner rather than later. That will be important, and leveraging on global standards, legal entity identification. All those are key topics. On the European side. Maybe let me start this time with the central bank perspective, and therefore also the cash side. I mean, T2S has this vision of a single pool in central bank money, and this vision has been definitely progressing. It can progress further with consolidation. We will have a single pool, an even more efficient single pool of liquidity, central bank liquidity for all users of the community. So the integration on the liquidity side is as important as it is in a certain way on the security side. You need both sides, let's put it this way. And in Europe specifically, we have still the legacy coming from the pre-Euro times, and having all the jurisdictions with their own silos initially. And then we have this vision of financial integration in the EU, and the ultimate, I would say, objective is that the location of the actors in the securities transactions, so both the capital seeker, the capital provider, the seller, the buyer, should not influence the related costs and risk of such a transaction. And this vision, of course, we haven't reached it. There are still lots of barriers and legal, specifics which prevent this vision to be reality. So how can we nevertheless progress? we want more competition between CSDs to move towards this ideal. And I think there's pressure, of course, in this space in our world where, some cost factors are ever increasing: IT costs, cyber protection, regulatory compliance. There's quite some how to say, incentive for horizontal integration. And, in our world, the CSD, the legal entities, will probably remain, but economies of scale and scope you can also reach through, integration, building groups, and then leveraging on systems to use them in multiple CSDs. I mean, we see some big groups, of CSDs emerging in Europe, which, per se, of course, don't add to competition, but they add to economies of scale and scope, and therefore potentially cheaper security settlement. And of course, then we should move in on the side of integration standardization. And here we don't give up. We have all the work streams which the AMI-SECO is running on corporate action. We always, repeat the topics like the withholding tax issue. So let's say we continue to try to contribute to the vision of a capital market union in our space as much as we can. And that's ongoing, and probably we'll never, the ideal state we never reach. But for us in Europe, I would say that remains that kind of conventional work, which has been ongoing for, 10, 15 years now, will have to continue and has still a big potential.
Thank you. And Stefan, your industry trends.
First, applauding from Mike and learning the past, current, and future we have to live in parallel, resulting in a 16-field matrix. I do believe that is not a speculative. This is a reality for our industry. It's a great image. I think similarly to what Ulrich said, I applaud the enormous continued effort to also resolve the granular, capital markets union challenge. I think that is a reality. The power to need to achieve that in Europe is really by now very strong, and the determination and indeed the fixing the small items. Those are two big evolutionary trends. I think the third I would really emphasize is the continued change in our clients and the clients of our clients' structures. The consolidation of the custody chains is an inevitable, and it's moving. It's technology, economics driven, it's a reality. So I think we need to face with a changing depth of that custody chain. But even more important, if we think beyond our clients to the clients of our clients, and there the increasing penetration of the platforms on the accounting, but much more than accounting, the entire value chain processing from a pre-trade portfolio design to a trading to an operating middle office and back office and custody. I think the buy side and the change of the buy side and how they process securities is something which is, again, not just the custody chain, it's the clients of our clients. And I think there we need to be very conscious that trends that are happening there, because I believe both the custody chain collapse as well as the change in the buy side's own infrastructure handling is very, very significant for us as CSDs.
Now, I know we're getting close to time here, but I'd like to hear final comments from both Guillaume and from Javier. So Guillaume, your remarks.
Thank you, Kay. I'll be very, very, very brief. I can subscribe to all that has been just said. I would just like to stress on the data topic. We are really convinced at Euroclear that data will be at the core of our future. Of course, we in sharing data, disseminating data, also bringing some more transparency to the market, and also playing a role in the development of sustainable finance. And we do believe that as a CSDs, we have a role to play as a CSD, as an FMI, and all FMIs have probably a role to play in really driving the financing towards sustainable finance. This is the reason why we have acquired a startup called Greenamy, which is playing and working on ESG data for the benefit of investors, auditors, and the market. And we really do believe that it is a key trend for us in the future.
Javier.
Well, going last means that all good predictions have already been made by my colleagues. So, but yes, conscious of time, then, I mean, if we look at where we started the session and the earlier comments and client considerations, the fact that we continue to work in a transformative market that is looking to finance the global economic transition into green finance, indeed. There are several barriers that need to be addressed. I think first and foremost, again, we are systemically critically important infrastructures, our core financial market infrastructures, and a deeper awareness that with consolidation, convergence, and scalability comes a responsibility for all of us for even or continued focus on security, resilience, and reliability. That is paramount, and that will stay, of course, in the years to come. And then it's been mentioned, I will maybe pick it up again, the point about refragmentation and the renewed focus on addressing unharmonized standards and asset classes, myriad of an emergency of new technologies that will require infrastructure to be able to interlink and interoperate, as well as provide the ability to connect to various settlement methods, fiat currency, CBDCs, and other new forms of settlement, to prevent that concept of refragmentation. That's that I take from it.
Thank you all very much. And that has been a real whistle-top tour of the post-trade world over the last hour and 15 minutes. So thank you all very much for your contributions. And I'd just like to finish by saying a personal thank you to Mike Bodson, who is, I understand, retiring this summer from DTCC as the chief executive. And so thank you, Mike, for all that you've done for the post-trade world over the time you've been at the helm of DTCC. Really appreciate it. Thank you all for being here today and really appreciate it. Over to you, Anna.
Thank you very much, Kay. Thank you, dear panelists. And indeed, we thank you. Thank some of the most senior leaders of the financial market utilities for sharing with us their vision for the industry and for joining this conference today. This has been a truly forward-looking panel speaking about the future with technologies, with the change of the settlement cycle potential, but all in regards to the essential role that the financial market utilities are playing as trusted parties and key for their financial stability, of course. Thank you. Thank you very much.
I would like to thank all the panelists, and in addition, just add our thanks to Mike, given that he's retiring in August and has done so much for this industry over the past decade. Wish you all the best, whatever the future brings.
So indeed, now that we have thanked all of you, we are ready to pass on to the next steps of our conference today. But thank you very much to the panelists. So now, as it has been announced in Marrakesh, the next in-person event was planned to take place in Prague in 2021, which is, of course, has been postponed due to the pandemic situation. The health situation has improved since then, and I leave the floor now to our colleagues from CSD Prague to present us how they see the next in-person conference of the WFC. So I welcome on this stage Andrei Dusilek and Helena Chaka. Thank you and welcome. Over to you.
Hello from Prague.
Hello, everybody. Hello.
I'm Andrzej Dusek and my colleague Lena Chacka. And we would like to invite you to the world of CSDs in Prague next year. It will be after 4 years that another such meeting will take place. So we hope that many of you will be happy to come. Yeah. WFC will be held in the very center of historic Prague, where there are plenty of great hotels within walking distance, and most importantly, all the must-see places. The conference will be held in the historic Czech National Bank Congress Center, which is only 5 minutes from Old Town Square. I believe it will meet the requirements for holding such an event. By the way, here you can see the world of the Czech National Bank, and inside is the second largest gold coin in the world, 130 kilograms. The world door alone weighs 8 tons, and you can move it just one finger. We also choose special places for the evening program and gardener, such as the newly renovated National Museum. Although we cannot offer you the sea or the high mountains, we believe that you and your companions will enjoy your stay in Prague. So please save the date of WFC 2023 from 24th of May till 26th of May next year, and you will receive more detailed information about the conference, registration, and accommodation after the summer. Thank you for your attention, and we look forward to seeing you in Prague.
Thank you very much, dear colleagues from CSD Prague. So we'll be looking indeed to our next conference next year in Prague, and indeed we'll be saving the calendar slots to come to Prague. Thank you for that.
Please do it. Yeah.
Great. So now indeed we have spent 3 terrific days in the company of illustrious speakers of the industry. EXDA, AXDA, and other WFC associations join us when we express our immense gratitude to all of the speakers of the WFC 2022 conference.
Anna has graciously given me the final word for this conference. And I think most importantly, what I would like to say is our sincere thank you to Anna in particular and her whole team at EXDA for the tremendous job that they've done in organizing and staging this conference. It requires a Herculean effort over and above her day job. For that, we are most grateful. And I guess your reward for this is you get to support the effort for next year's conference in Prague as well. It's been really gratifying to see the engagement of the conference participants and the quality of the presentation. And as our colleagues from the Czech Republic said, we look forward to seeing you next year on the 24th and 26th of May. So I wish you all a great day and thank you for attending the conference.
Thank you very much indeed. Very good day and see you next year.